Good morning. Thursday, January 15th. I know a few minutes late. We apologize for that. We are going to spend some time today with Chief Executive Officer Joan Goldstein of VITA. They are going to make some, I believe, fundamental changes as far as how they would like to do business, and they want to make us aware of that. Is that correct?
That is correct, Senator. Thank you very much, and thank you for receiving us. I not been to this committee before.
Well, let us introduce ourselves. So,
Yeah, Brian Collmore, representing the Rutland District.
And I'm Rob Plunkett, Bennington District. Steve Heffernan, Addison County District.
Joe Mancher, Windsor.
Russ Ingalls, Essex Orleans.
Linda Lehman.
Nice to meet you.
So thank
all.
you. Thank you for
And
coming.
I'd like to introduce, I brought my team with me.
Hi.
So Thad Richardson, who I think you already know, but
Yeah.
Chief Financial Officer
Yeah.
at VITA.
Yeah.
And also Jennifer Emmons Butler, who's our Chief Legal Officer. Andy Wood, our Director of Agricultural Lending, and Christine Hinkle-Yanni, who's our Director of Communication.
Very nice.
Just to get an idea of who we are.
Thank
I
you.
spent a lot of time in the building, but not so much in this committee. Before coming on to VITA, I was the state's Economic Development Commissioner for about 10 years. Worked for both Governor Scott and Governor Shumlin. I do a little intro to VITA, Vermont Economic Development Authority. We were established in 1974, and we were meant to help economic development in the state, defined loosely as creation of jobs and creating opportunities for prosperity. We want to use our time today to tell you about VITA, but also Vermont Agricultural Credit Corp, which is a separate entity, but it's within VITA. And we call that affectionately VAC, VACC. What we'd like to do is have that inserted into the VITA statute, just as another subchapter. VITA, like I said, we were created in 74, and since inception, we've lent about $2.6 billion for businesses, farms, nonprofits, also agricultural enterprise other than farms, but to enhance the vitality of Vermont's economy. VAC was established in 1999, and that was formed to provide an alternative source of constructive credit to farmers and forest products businesses who are not having their credit needs met by conventional sources. The existing statute requires VITA to incorporate VAC for VITA's board of directors to serve as VAC's board, VITA's CEO to serve as president and CEO of VAC. What that creates is quite a lot of administrative issues. So, for example, we go in and out of different meetings at the board, even though it's all the same people. We fund through intercompany lending to VAC for payroll and for funding of loans. So separate books, separate, all to consolidate within VITA. A little bit of background, where does VITA's money come from? We're not asking for appropriations. We do receive appropriations from time to time for specific programs, right? Last year, we received like $2 million to do a disaster recovery loan fund, of which this year we made available for drought impacted businesses and farms. But otherwise, we are issuing commercial paper, we get lines of credit from banks, and particularly on agriculture, it's from CoBank. We borrow from banks and then we lend it out to fulfill our mission. So in that way, we're just like another lender.
Who does the servicing of those monies when you lend them out? Is it the banks take or you guys take?
We do all of it. For agriculture, we lend directly, meaning there's rarely another bank involved. So on the agriculture side, we're direct lenders. We do the servicing, do all of it. On the commercial side, we do take positions and other bank loans. And so sometimes that's subordinated, sometimes that ranks first. And depending on whether it's participation or a separate loan, we do the servicing, and other times the bank is doing the majority of the service. But for agriculture, it's direct. It's a direct primary relationship. From our annual report, just to give you a sense of how much we do, we did 173 loans, totaling 61.5 million. 35.8 is commercial, 15 million is agriculture, and 10.7 was water and wastewater. That's another partnership with the state Department of Environmental Conservation has some monies for water and wastewater, and we service those loans. We make those loans, we make that underwriting decision. On the ag and forestry portfolio of the 83 million in total, that's 553 loans to 286 farms and forest entities. So there are many farms and forests that have multiple loans for a particular business enterprise. The two largest types of exposure is dairy at 30 million and maple at 14.7. Combined, that's over 50% of our portfolio.
Can we ask you, maybe you're gonna get there, Commissioner, and I apologize for interrupting. The types of these loans, are they growth loans, would you say? Are they servicing loans as far as to just to keep an operation, or what do you, or a mixture of all of them?
All of the above, everything from purchasing land, purchasing equipment, working capital, lines of credit, refinance, all of the above on the agricultural side. And some examples, I don't know where we are on the slideshow, because I'm not looking behind me, but yeah, on the recent, so some of the recent Vita agricultural investments was we helped Stewart Maple buy land, add more tubing, upgrade taps, and add new ones. For Jen's Animal Hospital, they purchased property. The Dorset Equine Rescue, they bought almost 200 acres. So it gives you an idea of the variety. Blue House Mushroom moved out of the owner's basement and into a new building.
Probably good.
Isn't that a good one? I love that one. We helped 802 Logging modernize and increase efficiency by purchasing new equipment. DeGraff Farm with working capital and loans for new equipment. And Lambert Farm purchased their farm, which I think they had previously been leasing. So it gives a bit of a flavor. On the commercial side, we helped Ben and Jerry's before they were a household name. Higher ground boarding stables use Vita financing to consolidate debt and support their growing equine business. We supplied financing to allow Machias Farm to expand, buying more land in Franklin County. Pete's Greens rebuild following a devastating fire, and Black River Produce purchased a building in Springfield. And Cabot Creamery, dating back to 1986, helped finance an 88,000 square foot facility in Cabot, including their first on-site refrigerated warehouse. Prior to those, warehouses were in Burlington and Albany, New York. So just as a flavor, the language that we're proposing, we worked on and gave to Steve Collier at Agency of Ag, and I believe he forwarded it.
He did. I was trying to print that off, and I was trying to print that language off, and for whatever reason, we couldn't get it to go.
So the summary, the current state, the Vermont Agriculture Credit Corp is a separate statute. What we want to do is incorporate that as a subchapter into the existing Vita statute, which outlines what we can do or not do. We want to also, there are a couple of housekeeping things. We want to remove references to the FSA because we don't want to have our hands tied by the feds. These are federal.
I was going to ask you about where your involvement was with FSA, where they were in yesterday, and they just seem to have a ton of monies, and and I don't know that maybe that a lot of that money is getting leveraged, but I don't know that. It just seems like there was just a lot of available funds that were available, but it sounds like your business model.
Historically, and I'll look to Andy, but historically we have used FSA for guarantees and less about borrowing from them, but I don't know if you have other.
Yes, our relationship with FSA is on loan guarantee.
Introduce yourself.
For anybody listening, you gotta do that.
Andy Wood, Director of Ag Lending at Vita. So yes, the FSA, our relationship with FSA has been guaranteed on our loans. Historically, that was an important credit enhancement tool that we used for ourselves. Today, we have used that less and less. If we as an organization have been more established, we're more comfortable with what we do. We have used that less and less. And it really hasn't limited what we're able to do as we've done that.
The capital that they can bring to the table, you can raise yourself, or
so the guarantees don't provide us with capital. It's basically an assurance in the event that our loans go bad. We do look to partner with them when they are when appropriate, particularly some of their with a direct loan, with them providing direct loans in particularly farm purchases or beginning farmers. They have some very good loan programs, and we certainly look to partner with them or even advise businesses to work with them when that is appropriate. And then a lot of their funding also comes through the programming side, which is, it's not grants, but it's more akin to grants than the loans on what they're able to offer in the programming side.
As far as the language, Attorney Collier will be in tomorrow, and we'll have him go through that language. So
Okay.
that we can get with that.
Yeah, and you'll see, I think, and Jennifer worked on it to make sure that we're just basically taking it, inserting it into the statute. We're getting rid of the FSA limits just because we don't want a limitation. And we also remove references to the Agricultural Credit Development Fund, which is no longer used. So just to clean it up and update it. And just so the committee knows, we maintain an unwavering devotion to ag. Like Andy leads a team of 4 lenders, and there are also 4 credit analysts that work with those lenders. So in total, agriculture, I'd say that's about 9 people devoted specifically to agriculture. We've had more streamlined operations, wouldn't be as concerned with administrivia, going in and out of meetings, intercompany lending, payroll and funding, and enhancing ease of administration. Absolutely no impact on borrowers or potential borrowers. We have a dedicated staff also in Middlebury, where much of the agricultural lending is, but we do lend all over the state. Yeah, the lending capacity, practices, oversight all stay as they are today.
Right. Well, your portfolio is pretty heavy with all what you just said. So it's just looking back at the 173 loans closed in 2025 and carrying that over to the agriculture and portfolio loans of 553. Where does the 82.9 million come into play? Is that what you're carrying currently on portfolio?
Yeah, that's the balance of the portfolio today. Well, I think that was as of 2025. June 30th, 2025. So just to show the production numbers are for a particular year and then what the total balance is. So as time goes on, people are paying it back, but we're also relending.
And I think one of the things that shocked us yesterday, not to compare you to somebody different again, but we've kind of touched upon that with FSA. It's just, it doesn't seem, there seems to be a disconnect as far as getting that name out there. You feel that you're properly leveraged in the farming community as far as people knowing who you are and how to turn to you and who to connect with.
We do, but I always feel like you can never be that well known, right? Like you can never be over well known. So one of the changes we made soon as I came in July as CEO, we hired Christine as our director of communications to do more outreach, to do more, whether it's social media or print ad or radio ad, just to get the name out there. But we do get a fair amount of our business on the agriculture side is from referrals, current customers who refer other customers, also people who are happy with us, keep coming back for more. The farmers are very innovative people. They're always doing something different, enhancing machinery, maybe building a building, enhancing the farm, facilities. So I want to say we're happy with it, but we always feel that we could do more. Not FSA, but Farm Credit seems to have the lion's share of larger farms, and we have many, many small ones, but we are all getting some business, people who have come from Farm Credit. So.
Yes.
Thank you, Mr. Chair. John, good to see you.
Yeah, nice to see you.
Is there a different group of underwriters for each particular business? How does that, who decides who's going to get the loan and?
Yeah, so there's different lenders for agriculture. They
Yeah.
tend to be, and many of the activity comes from Montpelier as well as Middlebury. The credit analysts, although they can work with commercial, they tend to also work directly on the ag side. So when I say 9, that's a combination of lenders and credit analysts, and to some extent, even the loan assistants.
And the process is fairly quick. If I'm a dairy farm
Yeah,
and I'm looking to get $200,000 loan, from the time I make application to the time it's either accepted or not,
Yeah,
A
it's,
week, 2 weeks, a
it could
month?
be, it could be quick. It's really dependent upon when we get full information
Okay.
from the farm.
Yep.
And the quality of the data, right? So it depends on this condition of their financials. The better condition, the quicker the process is going to
Yep.
go. It's not going to be held up, like we have director level approval, so they don't even have to go to committee. And then the higher up the exposure, it'll go to an internal committee, and then even higher, or a policy exception, goes to the board. And we don't wait for a board meeting. There's board loan committee meetings interspersed each month. So maybe the max you're gonna wait for a meeting is two weeks,
Yep.
but we have lending approval meetings every week
Okay.
internally.
Yep.
So something like 200,000 should be done pretty quickly. I do
Delinquency
say
rate,
that's the caveat, is the
Yeah.
financials.
delinquency rates,
Very low, and like, I should have that off the top of my head, but I'm gonna look at that. It's like,
single numbers?
yeah, oh, for sure, like less than 2%.
Okay.
I would think, I don't know, I'm lying here.
Yeah, sure. That Patricia said, CFO of Vita. I think the nature of our business as a patient lender, delinquency doesn't mean quite the same as it does in a normal banking sense, where we will be patient and allow folks to stretch things out
Yep.
and a bank's able to do so. If you look at a percentage, it's higher, but our actual losses when something goes fully all the way through liquidation are virtually zero. So
Okay.
it's a much different product for us, as we let folks take years to hopefully work out of any issues that they're in, but we very rarely actually. So if that makes sense.
Percentage rate. If you're saying, if you've got a good score, it's less, and as your score goes down, they have to pay a higher rate, or is it pretty much all?
Yep, it's a pretty tight range. So we have a risk rating matrix that we use, but for example, right now our loan rates are, it's 6% for a run of the average credit, and we don't lend to very questionable credits. So I think the bottom end is probably in the 7% range. So still very reasonable compared to what you find elsewhere.
Yeah, we're very competitive. We have a special forestry program right now. If they're buying equipment that has less impact to the environment, they get a 2.5% loan. Which is incredible, right?
Yeah.
So it really helps that.
And getting back to what the chair says, do loggers know that they have this opportunity?
They're finding out, because we are getting applications on that. And so,
Good.
yeah, and we've promoted it. Again, can't do too much promotion. But word of mouth is heavy, and yeah, we've got some great applications on the 2.5%. So, yeah.
As far as the regulations that you have to follow, are you more of a credit union type lender, or more of a traditional bank type lender?
Well, we're not regulated by the banking authorities, so, but we have our own policies, and we also, the state treasurer is on our board, and he is able to decide whether or not when we borrow, some of our borrowings are enhanced through credit enhancements, right? And it's the moral obligation of the state, not the full faith and credit of the state. So if we were to renege on our borrowings, the state kind of would not let us do that, right? Like they would not let it go unpaid. So of all of our borrowings, there's a certain percentage that is backed up by the moral obligation of the state. So to me, that's for all intents and purposes, our regulator. We're audited every year by an outside CPA firm. But other than that, no, I'd say we're not like a credit union. We're not like banks or credit unions. We don't take deposits. We're not really doing retail lending. This is all very business, farm, nonprofit. We could lend to municipalities. We rarely do, just because the bond bank does most of that.
So you're nonprofit, so the profits that are raised, through normal practices and all that just comes back in and just keeps on getting
Correct.
pumped in the backside.
That's exactly right. Adds to our equity position.
Thank you, Mr. Chair. So if I mischaracterize what you're asking, please say something. But it sounds like the same 5 people, for instance, that sit on VAC and Vita adjourn and then immediately reconvene, and maybe they switch chairs or something, but it's basically same 5 people. So to me, it's a housekeeping change.
Correct. I think that's absolutely.
Okay.
100%
Were
correct.
there,
It's
were there
perfect.
ever differences in the constitution of, in other words, were there 5 different PAC members at one point and 5 different, and I'm using 5, whatever the number.
Not to my knowledge, because then I think, Jennifer, correct me wrong, I think the actual statute called for it to be the same.
Oh,
Which is
Right.
very strange.
And we apologize, the language wasn't available in time. This is Jennifer Emmons Butler, Chief Legal Officer at VITA. The statute, actually, there's 15 members of VITA, and the chair is named. It's very specific in the statute who are the ex officio members and who are the members. And then the VAC statute just says shall be the same board. So it is the same board. The changes that we've asked for is just to take out the fact that it's the Vermont Agricultural Credit Corporation. All our other programs at VITA, we do other things by way of subchapter and program, but not by a separate legal entity. So you have the separate legal entity that has the separate boards, that has the separate finances. And you're right, you're in the same room. Not only is the board sort of like that, where it's the same people, but the intercompany loans, it's the same thing. And we have the same staff. So we're employing our own people and then lending it back and forth to have the same. And a
sounds like we
separate
created
corporation, yes.
redundancy here.
It does have some redundancy. That's what we're trying to get rid of.
Yep.
Thank you.
And the separation, was that done originally in 1974?
No, in 74, VITA was created. In 99, VAC was
99.
created.
Okay, do we know why it was done separately?
I don't know the answer to that.
Might be something to do with the funding structure too. It was a separate capital or appropriation.
Okay.
And the state to kind of kick that off. It
Okay.
ended up in a separate entity, but over time, we were doing agricultural before.
Yeah.
Separate entity was created, so over time, it has lost its reason for being an entity. At least VITA has 2 other entities as well that were established as requirements of other programs. And so over time, we look at those and say, do they still need to be that? And so we're in that process for VITA as a whole. But this is the first one that brought.
Yeah.
Great.
And most of your investment capital is coming from investors,
It's from banks.
from banks.
Yeah, so CoBank for agriculture. On the commercial side, it's TD.
Okay.
Am I missing anything?
And JP Morgan.
And JP Morgan.
So our borrowings are large enough, so as much as we'd like to use our local banks and we do that.
Well, those are pretty big
possible,
names in lending, so.
Where, I mean, we have an $87 million commercial paper program, 100 million of TD, so those are a little bigger than the local folks, things like that.
But you get to follow just some different guidelines that make it easier for a starting business or business to.
Well, thank you.
Yeah.
Very nice. Sorry for all the questions, but first time you've been in here and, we are a brand new committee, except for Brian's been here for a long time, so very valuable to us to understand how it goes. And, we see no problems. I don't see any problems. I had the, pleasure of, meeting with Joan earlier, and knowing that this was coming and it raised no concerns for me. And, again, we'll, get with Steve on the language tomorrow just to make sure that we're all good. But other
Excellent.
than that, we appreciate very much what you do. We appreciate you coming in, taking the time to come in on such a rough day, but, yeah, we're all good.
Thank you so much. We're very happy to come back if there's any additional questions.
Okay, thanks.
Thank you all. Okay, committee, we're gonna, take a little break here and if you guys have anything to talk about for, 17 minutes. So we'll take a little break and do what you gotta do and we'll,